And we're starting a major super cycle for gold and silver long term. So it's we're getting there. I mean, we're starting to see gold miners outperform gold. And that's a really good sign. We want to see that because typically gold will follow the gold miners, because we usually see speculative money move into the leverage plays, which are the gold miners. And then we see the bullion follow suit after that. So we're not out of the woods. There's actually a lot of work to be done, I think, for gold and silver to really actually break to the upside. I mean, I'm looking on gold. I like to see it above, 1,800 and change maybe, and then trade up there for a while, build a little bit of a bullish pattern or something like that. So there's still quite a ways to go, and it could actually go a lot higher, 1850, somewhere up there, to really change the trend, because the pattern that we're in right now is a major 8-month downtrend. And when you zoom out on the chart of gold, it's a very large bull flag pattern, and it doesn't reverse overnight. I know last week a lot of people were getting excited because gold miners were starting to break to the upside on the daily chart on a small pattern. Silver miners were, and gold was starting to show signs of breaking above the 50-day moving average and really get some upward momentum. But we're still really early, and I'm not much of a bottom picker. You won't catch me saying, okay, well, let's just go here and buy this, and I think it's going higher, because technically for the last 8 months, we've had lower lows like every month. So trying to pick a bottom has been very painful. I'd much rather get in after the momentum's changed direction. We see price going higher. I'll jump on the first pause or pullback, and then we just let that trend continue until the technicals say, hey, it's time to get out, or our trailing stops get triggered. So there's still some work to be done, but I really like them here. I'm getting really excited. I'm starting to get ready to potentially offer a bunch of gold stock trades and silver stock trades, because I think we're getting into that time where they become like little rocket ships, huge gains, hundreds, sometimes thousands % return. And we're starting a major super cycle for gold and silver long term. So it's we're getting there. I don't look at inflation. I don't look at economic data. I don't really care about news so much. I know most of them favor higher prices for gold, which is kind of nice, but I strictly look at the price action, and I zoom out on different timeframes: daily chart, weekly chart, monthly charts, and each one gives you a different upside target and how long it should take to get there. So, we're looking potentially late this year, we're, $2,000 and beyond, potentially right at the end of the year. We could be up at around 2,700, 2,750 on gold. So there is the potential for a mega rally if we can get traction and see that take off. And that's why people are so excited, because the gold miners, if gold does that, these gold miners are going to make a fortune, and the share prices are going to go absolutely ballistic. So it's mostly technicals when I look at the charts. It is all technicals, actually. It's just follow the chart pattern based on your timing. So if you're a short-term trader, I'd be focusing on the 30-minute and daily chart. If you're an investor, I'd just be looking at the weekly and the monthly and looking for breakouts of bullish patterns, because we're in a bull market. So it's, you buy the dip, do you wait for the momentum to reverse and start heading up and then get in? It's just up to your personal preference. I like to jump on a trend that started versus trying to pick a bottom when it's in it, going against you. Depending if they get traction right, like right now, they're just starting to turn around. If they can keep this momentum and we start to see them move higher, I think in 3 to 4 months, we could be up at that 2,000 mark, $30 plus silver. I think we're really close. We just need to get traction. And that's what we keep lacking in this sector, is we get these nice rallies, people get excited, and then it just fizzles right back out. It gets sold off with heavy volume. Whoever's driving these prices down, I mean, eventually is going to run out of ammo, or hopefully anyway. But I think 2 or 3 months is like or 3 to 4 months is the early possibility. But late this year, I think we should be hitting those levels and threatening a big breakout above those. I mean, the last major bull market was kind of the 2001, 2004 area up to 2011. So there's a pretty big run. I think we're looking at something that could last 4 or 5 years. For an initial very big, powerful run where we're going to probably see a huge shift in the way, I mean, things are already shifting already, but there's probably going to be a big shift in currencies, digital currencies, financial issues. So I think there could be a very big push there. Overall, I think the commodity cycle is coming into a 15 or 20 year cycle, which is going to go kind of full circle. And it could be more or less a 10-year push in commodities, and they could really be very strong for a long time. So The last time we saw a cycle like this was 2001, 2003, 2004, where everyone was in equities, they were in real estate, and commodities were very undervalued. They're at like 100-year lows in terms of value, comparing the valuation. And we're back at those levels again. So it feels like we're going full circle once again. And within this mega super cycle in commodities, we're still going to have big corrections. During that, we saw the 2008 correction in gold. It pulled back like 35%. Silver pulled back huge, but it was actually still a pullback within a mega super cycle. So it's still very bullish. When you look at the super cycle view, as a long-term investor, you would have got out and got back in again. You want to avoid those big crashes. So it all depends on your time frame, but we're looking at 5, maybe 10 years of really strong times for commodities. And, you look at lumber right now. I mean, lumber's gone from, $200 all the way up to $1,300. So commodities are really just getting started. I don't want to see price spike with some short squeeze and everyone trying to create a short squeeze that, so many people are talking about it, trying to force it. They're trying to manipulate everyone, but I mean, it's not going to happen until it actually truly happens. You can't, a lot of people just talking about it isn't really enough, I think, to actually create it at this point. But it'll happen, and I think it'll blow past it. I think it'll go through 50, and it's going to go to like 87 or so. That's what the charts are telling me. At that point, we'll see what it does there. But I don't want to see it spike up there, because if it spikes through 50, it's probably going to come straight back down again, because it's going to be a news-based emotional event. It'll be herd psychology of everyone piling at the same time. And those are not sustainable. I would much rather see it over the next 4 or 5 years, get to 50, 80, 90, 100, whatever it's going to get to. Something that when it does pull back, it's not everybody who rushed in is now rushing out and it just collapses. It's just people going to pull profits off, and you get a nice bull flag pattern, just like what we're seeing in precious metals over the last 8 months. It's a very controlled pullback. It's very bullish. Even though it's been going down for 8 months, it's a very good way, a good price action. So this is sustainable. It's pointing to much higher prices. And we just you gotta let it mature, right? Everything takes time to mature. Once the floodgate opens, I think we could see a big wave of people who haven't been buying and accumulating to play catch up. Just like a lot of people with anything, everyone went into lockdown and they stopped doing what they normally do. And those countries that buy a lot of gold, I think they stopped buying a lot of gold just because they don't know what's going on. It's uncertain times. So everything's playing catch up. It doesn't matter if it's building materials, sporting goods, like luxury toys, everything is sold out. Everyone's trying to, catch up with what they want. And now that they're stuck at home, they want to just accumulate wealth and learn to appreciate life and family and staying at home. So I think there's going to be a catch up in the gold silver market.